In the previous video, I talked about, it was mainly about, how to scalp VIX 75 using the moving averages, and that is exactly what I'm going to be continuing right now, right? It's like the strategy is all about, being able to scalp it like just like that, all right? And if in a day you can, do it continuously for even 3 or 4 times, or even let's say just four times in a day, and then you're able to make $8 out of it. 8 times 4 is how much? You are good to go for the day. All right, so I will head back to Telegram and then get to the screenshots. So our next is this very chart right here. All right, so I think in the previous video I was trying to talk about this, but I didn't complete it. So right here I placed, you can see right here, I placed 3 cells, all right, 3 consecutive cells right here, simply because this very bearish candle was getting close to the moving average, which is the 50 moving average, right? But it didn't get to it, and then it's completed formation. That is the 1 hour time frame. And then guys, also with this strategy, all right, it works perfectly well, like most especially when you spot them on the bigger time frames, all right, like 1 hour, 4 hours, and even daily. All right, that way you are able to accumulate a lot. It can even exceed $10 or even $20. All right, so it was getting close to it, and it's completed formation without getting touching the 50 moving average at all. So I knew the next candle would complete that mission. So the next candle opened, it went opposite a little, and I was in the loss, but I still knew, no, it is still getting close, it is still going to touch it or break it. All right, so it touched. I waited for a few seconds to see if it was going to break, and it broke and kept on going down. So that is it right here. So you can see after 1 whole hour it's completed, and I can't even tell you how much I made just after this huge bearish candle here broke the 50 moving average. All right, so it is always about anytime it is close to the moving average, it's going to touch it or it's going to break it. That is all. So if you can scalp it like this, like continuously for like 4 times or 5 times in a day, you are good to go. All right, and I told you VIX 75, you can, if you don't take care, you can blow your account easily. All right, and if you want to trade it like you trade forex, like you draw your lines, you draw your support and your resistance lines, and then you are able to tell from here it is moving to the top, and you just sell just like that, or you buy just like that, just moving opposite to that direction for just some few minutes. In the forex, it wouldn't affect you that much. All right, if it should move opposite to your trade, like 10 pips or let's say 5 pips in trading forex, it wouldn't really affect you that much. Or even with this synthetic indices like crash or boom, it wouldn't affect you that much. But when it comes to this particular golden boy VIX 75, it is going to affect you very huge, very, very huge. All right, which is why I developed this strategy. All right, just scalping using the moving averages. All right, so right here, after it's closed here, this 100 moving average, which is the black one, it was the distance was too big, so I waited for a while. I didn't want to place any new trade. Then the next candle right here, this very candle right here started forming. All right, so it also came, it was getting close, and right here you can see I placed another sell. Why I placed another sell? Because I knew it would touch the 100 moving average. All right, so right here I placed another sell. You can see the entry order right here. So I placed another sell, but that very candle didn't touch. All right, that very candle didn't touch. So the next candle formed. All right, the next candle started, and guess what? The next candle broke it. All right, it started right here, which is the doji. You can see it's completed in the doji form, but it started and then it broke, and then it's crossed 2 moving averages at a time. All right, so first of all, you can see how bent the 100 moving average is right here. That is a confirmation the next candle is going to touch. You can see how bent it is. That was exactly how the 50 moving average was. All right, but here it is no more straight. All right, because as the price keeps on going down, the moving average try to move in that same direction. All right, that is why you can see here it is bent this way, but right here you can see how straight it is. All right, sorry I said bent earlier. You can see how straight it is here. All right, it tells you the next candle is going to touch it, so it's broke, it's deep, it's got here. All right, and I think my lot size was 0.002, so I was somewhere even more than $10, even just with this, more than $10. All right, so right here, so once it touches or it breaks it a little, you get out of it. All right, so you get out and then you wait to find out what happens next. Now guess what happens? It pulls up to form a doji. All right, now the minute it pulls up to form a doji, it means it's closed above the moving average. And yes, still the 100 moving average, or yes, still you can see it is still the same shape. It is straight as I was talking about earlier. So it is still telling you the third candle that will form will also touch it, which is right here. You can see it. I don't even have to talk much about it. You can even see it happening. Like you can see the motion. It was in motion right there. All right, so the next candle, it's touched and then it broke and then it touched this very one, the 150 right here, and you can see just within 30 minutes, okay, that is the 1 hour time frame, just in less than 2 hours I was somewhere $30 or even more than $30, and I'm not even using big lot sizes. So it's just 0.01 and 0.02. all right, so can you imagine if you spot setups like this let's say 10 times in a week, just 10 times in a week, I'm not saying in a day, even 10 times in a week, how much will you be making? All right, so that is it right here. So I will head towards to the next. I'll do a lot in this particular video. Right, I think the mentorship group has been dull. It's been very, very dull, and I really, really hate it. So I'll be doing a lot right here. Okay, so let's move to the next. Wow. I just love this. All right, like I just like what I'm seeing right here. All right, now first of all, this very here is a pattern. All right, this very here is a pattern. Now let me tell you something. I'm going to talk a little bit about resistance in this video. All right, so you can see right here, and this very move, this very particular move, I can't tell you exactly how much it's made me. All right, this very move, because starting from right here, breaking all these moving averages, I made every single profit out of it using this strategy. Every single profit. All right, because it breaks up, it touches, it gets to the next, it touches, it gets to the next. All right, you can see this very one right here, and this is 4 hours. All right, so you can see it will be coming, it gets somewhere close to it, and then I buy, it touches, it breaks, and then I get out of it. All right, the next candle starts and then it pulls back, it touches, just like that. It keeps on going, like it keeps on repeating itself just like that. So you can see right here, it's moved up and then it hit a resistance level. So you can see my resistance line. I plotted a resistance line right here. All right, the black line you are seeing. So it moves up and then, all right, so it moves up and then bang, it hits a resistance level. So it pulls back a little. All right, so it drops, and then it gets close to the 21 moving average. It breaks it, and after breaking it, it closes below the 21 moving average. All right, then a new candle starts, it pulls up a little bit to touch it, and then it continues downward. So you can see the pattern. It looks like an M. All right, it looks like an M, like it is forming an M. In forex, in forex we call this the double top pattern. All right, and this is Japanese candlestick. So I will still refer to it as the same as still candlestick pattern here. Now let's talk about, so you can see right here, it got to the neckline. All right, this is the neckline. All right, exactly where it's like it stops and then retraces back like into its previous movement. All right, which is the bearish movement right here. So you can see right here, it got to the neckline and then it's pulled up again, and then bang, it broke the 21 moving average, and then right. So most of the times, all right, if you spot something like this, like you realize, and then this very pattern, all right, this very pattern, you will spot it a lot. All right, I have analyzed the VIX charts several times, and I come across this very pattern a lot on 1 hour time frame, 4 hours, on 30 minutes time frame. Like you'll be coming across them a lot. All right, so you can see now one thing about VIX is that, all right, if the price gets rejected at a particular level, all right, you realize the next time it gets to that level, it is likely, the rejection would occur again. It is most likely the rejection will occur. So anytime you see a huge candle like this, all right, a huge candle, let's forget about the bearish ones, all right, let's just focus on this very huge bullish candle right here. Anytime you see it's forming, all right, rising up, and then it gets to somewhere here, the middle, all right, it gets to the middle here, then you just focus on the previous rejection, and you realize it was somewhere at the top, all right, somewhere at the top, and the current candle which is moving upwards, all right, that isn't yet close to the level where the previous rejection occurred. It tells you this very bullish candle, it would rise, it would make sure it rises up so high and gets to that exact level. And once it gets to that exact level, then you realize it will begin to pull back. All right, so you can see the bullish candle right here. All right, it rose up and touched, and just after touching it, all right, it pulled back, and then the bearish movement began. So it was like a second rejection again. So all I'm trying to say here is that anytime you spot a bullish candle like this, all right, rising up, and then you look to your left and you realize hours ago or a day ago there was a rejection at a particular level, and the new candle forming is also trying to get to that level, then you switch to the smaller time frames, which is 15 minutes or 30 minutes, all right, and then you realize like with stuff like this, you just want a perfect entry, all right. So with this very trade, right, I spotted it right here. After it got here, all right, you can see after, okay, mine was a sell. I think the buy order has been closed. I already closed the buy order, so I bought somewhere here, all right, because I realized no, after this, and then there were so many consolidations right here. You can see them right there. So many dojis and so many indecision candlesticks right here. All right, it's like they don't know whether you can't tell whether the bulls won or the bears won. The final formation of the candlestick, it ends up in the middle. All right, so you call that an indecision candlestick, meaning neither the bulls or the bears won. It doesn't matter the color, whether it is green or it is red. All right, but the minute you realize there's a huge candle forming, breaking out of that indecision, it tells you that particular whether it is the bulls or the bears, it tells you they are winning right now. So the minute I saw that, so you can see right here there was a doji, all right, a huge doji on the 4 hours time frame, a whole 4 hours, and it's formed a doji, something like this. All right, now this is where I talk about time frames, the differences. The minute you realize there is a huge doji on a bigger time frame, like 4 hours or daily, when you switch to the smaller ones like 1 hour or let me say 30 minutes, you realize there are so many like ranges there, let me say it that way. So many, like the candlesticks, you realize they are neither moving upwards or they are moving downwards. All right, they are just moving sideways and forming so many wicks, like messed up. And such charts, if you don't take care and you mess with them, they will blow your account. All right, so anytime you open your chart and you spot such things, don't even try. All right, because even though they are messed up on the smaller time frames, but on the bigger time frame they are forming something. And what are they forming? You realize they end up forming a doji. So it ends up in the middle. So neither the bulls won, neither the bears won. It was an indecision. The next candle will determine who won that indecision. And guess what the next candle was? A bullish candle. Then you just buy. So once you buy, you just keep your eye on it, all right? So it would begin to rise, and don't just buy the minute it begins formation, because there can be a pullback. And one thing about pullbacks is that they can be very long, all right? the pullbacks can be very, very long. The shadows or the wicks, that turn out to be the pullbacks, they can be very, very long. So you just wait for some minutes for it to pull back, and then as it begins to rise, it keeps on going, then you enter. All right, so once you enter, your target, all right, your take profit is the previous rejection which occurred here. So you plot your resistance line, and then your take profit should be that rejection. All right, so you can see it will do everything it can to get to that same level, and once it gets there, there are two things: it either breaks it or it pulls back again. So you can see it was rejected twice. Now let's focus on our strategy here. So now take a look at this 21 moving average, all right here, and look at the shape. All right, you can see it right here. All right, very, very horizontal, straight. I'm not talking about the whole this curved part, just the tip of it. All right, you can see the shape. All right, now you spot this very bearish candle dropping, and then you see something like this, the moving average right here. Guys, like, I don't even have to send you a message you should sell, or I don't even have to beg you, or you don't need a signal provider to tell you this is a sell. All right, this is your strategy. This is a strategy you use to trade. All right, and you've been told anytime it is getting close like that, and the moving average it bends and becomes horizontal, just the tip of it, it becomes like this, as you are seeing right here. It is a sell, and once you sell, you wait for it to touch, or you wait for it to break it a little. Now mostly I'll prefer, if your account is very small, if it's not big, just it touches and then you get out of it. All right, so you can see right here. So now let's look at what happened next. Check out what happened next. I don't even have to talk about it. I think you are even seeing it right here. It touched and it broke and bang, you just get out of it. All right, don't say, oh no, it's going to get to the next one, or don't say it's a pattern, so it is going to complete, it's going to get to the next neckline. Don't deceive yourself. All right, because one thing I've also realized about VIX 75 is that it doesn't give a shit about patterns. All right, sometimes it is a correct pattern, like this very pattern right here, this, and then this right here, this indecision candlesticks right here. It was a flag. All right, it was a huge flag. I was expecting it, and then it broke, so it started forming. All right, and I knew, wow, this is a huge flag. And guess what, thinking it would continue to go down, it formed a bullish candle and it went up. So VIX doesn't really mostly give a shit about patterns. All right, it can mislead you if you want to focus on the pattern so much. So just focus on the strategy you are using. All right, so you can see it right here, it was getting close to it. All right, right from here it was getting close to it. So you enter, you sell quickly. Once you sell, you wait for it to touch, break a little, and you get out of it. You've taken your profits. You wait for the next setup. All right, now let's get to the next one. All right, we have the same thing here again. All right, the same thing, just like I said in the previous video, we have the same thing here again. You can see this very candle. All right, it was getting close, coming down. The minute it gets to exactly where it is, all right, somewhere almost close. All right, don't try to fight for so much profit to say, once it is let's say somewhere here, then you sell, because it is going to touch, because most of the times it touches, and because I have confirmed it is a strategy that works about 80 to 90% of the times, so it is going to touch. No, sometimes it can pull back, and that pullback, it wouldn't be pulling back because this time around it has failed maybe once out of the 1,000 times it has been successful. No, but most of the times what I realize is that if it is getting close on the bigger time frames, all right, it is somewhere halfway, which you're not supposed to sell. All right, halfway, getting close to the moving average, you realize sometimes it can just stop there and then pull back. Now that pullback doesn't happen to be a pullback because the strategy didn't work. No, it happens to be a pullback because sometimes when you switch to 15 minutes or 30-minute time frame, you will realize there's a moving average, on top, somewhere above, all right, which, a new candlestick on the 15 minutes time frame, it's hard to hit before coming back again. So that is where sometimes you realize on the 1 hour time frames, it will be getting close somewhere halfway to it, and then it will begin to pull back, all right. That is what happens, because on the 15 minutes time frame, it will take so many candles on the 15 minutes time frame to form what? Just one candle on the 1 hour time frame. Just like it will take 4 huge candles or 4 candles on the 1 hour time frame to form one huge candle on the 4 hours time frame. That is exactly what happens here, all right. So if you see a huge candle like this dropping down, all right, don't just like it is halfway, all right, it is not as close as you are seeing right now, but halfway. Don't rush to sell, all right. Just switch to the smaller time frames and realize if there isn't any moving average like somewhere above, because this time around this is heading downwards, all right. So you switch to the smaller ones like 15 and 30 to find out if there isn't any moving average above, which a new candle forming on the 15 minutes or 30-minute time frame wouldn't have to pull up upwards just to hit them or to tag them to form a wick before dropping down, all right. And those small movements, they can cost you a lot, all right. And I've said a lot about losses on VIX, all right. They can cost you a lot. That is why I always want you to make precise entries, all right. Now an entry like this, right where it is a precise entry, right where it has gotten to. I think I entered early, all right, but don't focus on my entry. I entered early because my capital is so huge, so maybe I can endure that loss. But maybe you have just $100 or you have $80, all right. That loss, that $15 loss or $10 loss, it would freak you out. So you wait to make an entry that as for this is going to happen. So somewhere here, I don't even have to beg you should sell. You just know it is a sell, just like the previous video. So you just break a little, you get out of it. Let's look at the previous chart. Guess what happened? It didn't just break a little. In fact, it break very huge, very, very huge. All right. So you realize, it just keeps on happening all the times. All the time, it keeps on happening all the times. So right here. Okay. So I will end this video here, and then I will start recording a new one. I think the quality of this video is very huge, and I don't want the sizes to be, very, very huge for you guys to download them. So I'll end this one here, and then I'll begin a new one.